Welcome back to Invest Africa, and still with me in studio is Colin Rezek. He's Director at Vantage Mezzanine, and from our bureau in Lagos is Dapo Okubadejo, who's partner and head of the financial advisory firm KPMG in Nigeria. Thanks so much for staying with us. Colin, let's pick up on that which Dapo was running us through ahead of the break. I mean, he outlined the various sectors that are starting to open up opportunity over in Nigeria. If we get a little bit more specific, what's the one thing that often gets your attention about a company that you want to actually get into?
I think there are a few things you look at. I think one of it is sustainability. And sustainability really means defensibility. Is, you know, how established is that company? We always find that the top three players always, I think, survive in the tougher times. So we as a private equity or mezzanine house like to believe, let's support the players that are number one or two in the industry. Then we like to look at the, as I said, sustainable or defensible industries. I think like healthcare is very popular. Food sector, we spoke about fast-moving consumable goods. We've invested in a company that operates across East Africa and wants to operate across Sub-Saharan Africa in that sector. And I think definitely, you know, infrastructure, where it is large tickets and there is a role to be played by the development funds and about governments themselves. But I think around the industries around that definitely have, I think, an important role to play in bringing that infrastructure together, because without the logistics, you can't move these goods across the country, and that becomes your challenge.
What process does the entrepreneur have to go through with you before actually qualifying for finance?
You know, often it's, I think there are a few things. Of course, the entrepreneur himself, you know, it's always people. You're backing somebody. I've seen successful people do very well in a, let's say, a moderate industry, and vice versa. In a very good industry, I've seen, let's say, not the best operators not do very well, even though it's a very good industry. So I think people are very important. I think as I said, the industry itself, and then the systems, the controls, the way they run the business, the collaboration also is to bringing other people in their team. And the
openness to collaborate potentially with a partner like yourselves. I mean, how much hand-holding do you do?
You know, and that's a delicate one. That's where you need a people skill, because you want to guide them, but you don't want to run the business for them. And because you don't want them to be reliant on you, and vice versa. So I think it is a bit like a marriage where both parties have to work at it. And it's very important that they understand what your objectives are and you understand, you know, what their objectives are. Because in private equity, there generally is an exit frame, so you need to tell them upfront about that and how it works, and they have to buy into that strategy.
Double, broadly speaking, I mean, when it comes to some of the fundamental issues for developing, you know, and maintaining, sustaining growth levels, judicial and regulatory framework has got to be amongst the key focus areas as well. What's your evaluation of African governments' backing of open market philosophies and the work they're doing from a regulatory perspective to actually encourage investment?
Yeah, I mean, I think that when you look at Africa compared to most other emerging markets, I think a lot of the national governments have actually been very forthcoming in giving a lot of, you know, incentives, tax waivers, 100% foreign ownership, easy repatriation of profits and dividends. I think most African countries have been able to do that. I think the real issue from the regulatory standpoint is the judicial system. In case there's a commercial arbitration or there's a commercial suit, you know, how quickly would that be settled? I think, you know, there's a lot of learning and growing in that area. But aside from infrastructure, where you have to deal with government, where I can say that there is some element of political risk there, you know, most other sectors are, you know, really purely consumer-facing sectors. Like, you know, banking services is already been reformed in most African countries. You know, fast-moving consumer goods. Once you've got very good business model and you know, you have a fast-growing sector, you have a huge consumer population, increasing urbanization, you know, then, you know, there's less risk in that space. So that's the way I'm going to put that.
Colin, while stride gets made in that regard, exit options are limited, though, and that a very important consideration for us to take, you know, when or to make when investing in African companies. Only 4 exchanges in Africa have a market cap greater than $50 billion. Others don't have the liquidity to absorb IPOs in excess of $100 million. And one would assume that, that's not doing feasibility any favor here.
I beg to disagree in a sense that I think good businesses in Africa will always have buyers, and be it international buyers, absolutely, be it other private equity players. So I think exits, I don't think are a big issue. And, with the other type of funding like mezzanine funding like we have, we help people, take cash out the business, or we help people exit in a way. For us, exit is self-liquidating in our structures because it's paid off over time, and there's an exit date where we get refinanced. So from our perspective, it's not a problem. I think from private equity players, if it's a good business, there'll always be, and especially the multinationals who haven't looked at Africa before, they're starting to look at Africa, want to get a foothold into Africa.
Double, we've got 30 seconds here, and I heard agreement from your side, but what needs to be done to develop the sector to improve the risk-reward characteristics of unlisted companies?
I mean, I think essentially you've got to have a good business model. You've got to be operating in, high growth sectors. And then, of course, you've got to also focus on the scalability of the investments as well, and the structure of the private equity investing itself. I mean, the classic example that I always give when people talk about exit is Actis. Actis is one of the biggest, emerging market, private equity firms in Africa. And in the last 10 years, they have actually exited, over 40, transactions, right? So once you got a good business, and then, in a very high growth sectors, and when you look at some of the structures in terms of self-liquidating structures like, some of the structures that are being adopted by Advantage, then I think he really would help significantly in exits.
Dapo, thanks so much for having joined our conversation this afternoon. Of course, Dapo Akubadejo is a partner and head over at KPMG over in Nigeria. And thanks as well to Colin for joining us in studio this afternoon. Colin Rezek, director at Vantage Capital.